Hello again. We're here at the Frontier Securities Investment Conference 2011, and I'm joined here by Mr. John Johnson, who is the CEO of the CRU group. Mr. Johnson just talked this morning about commodities, so we would like to extend on this topic. Mr. Johnson, we all know that commodities have been a hot topic over the past years, but from your expertise, what do you think offers the best prospects for commodities over the coming 5 years?
Well, you may have heard in my presentation this morning, we did a poll during my presentation asking the audience which commodity they thought had the best prospects, and they had a choice of precious metals, steel-making raw materials, in other words iron ore and coking coal, and base metals, obviously which includes copper, which Mongolia has in abundance. Mm-hmm. The answer was overwhelmingly in favour of steel-making raw materials, which was a little surprising, because then we went on to analyse the markets during the course of the presentation, and we revealed that we thought the best prospects were in base metals, particularly copper. Obviously, Mongolia has copper in abundance. There's been a lot of noise in the market recently, given the involvement of the financial sector and so forth, which has taken some of the edge off the copper market, but the long-term prospects for copper still remain fundamentally sound, given issues over supply and increasing demand coming from the Chinese market. You know, China has a plan to build a lot of smelting capacity over the coming 3 or 4 years or so. So we think the prospects for Mongolian exports of copper are extremely good. Possibly there's less of a transportation issue regarding copper, although clearly you need to get it out of Mongolia as well. Then looking at coking coal and iron ore, again, I think the market is just about peaking out at the moment, and one would expect more supplies to come on stream over the next 2 or 3 or 4 years or so. So we're actually forecasting prices will remain relatively high, but they will start declining over the next 2 or 3 years, possibly more so in iron ore, given the amount of capacity expansions coming on stream in Australia, Brazil, and new people coming into the marketplace. Perhaps less so in coking coal. There are various issues regarding the supply of coking coal, which makes coking coal more of a risk. It's harder to find. The places which are being exploited are perhaps a little bit more risky than the traditional suppliers of coking coal. So there is I think a clear opportunity for coking coal to continue to remain relatively high compared perhaps with where it was 4 or 5 years or so ago. We're expecting medium-term prices around about the $200 a ton mark, which I'm sure would make many Mongolian producers quite attractive as an investment, or to sell it into the Chinese market. Okay.
Given that the Mongolian market is so reliant basically on Chinese exports, what commodity you think would be most sensitive to the Chinese market, and is there room for diversification maybe towards Russia or to other markets?
Wow. I mean, China needs all of Mongolia's commodities, and clearly there's a big issues over that. Uranium obviously is a sensitive topic. There's a huge amount of even notwithstanding even the crisis in Japan, there's expected to be a huge increase in nuclear power capacity in the Chinese market. That may be a little sensitive, perhaps, politically, as opposed to Russia. It takes a long time to develop uranium mines, takes a long time to build nuclear reactors, so I think there's going to be a lot of toing and froing and politics between now and when the those potential deposits come on stream.
Okay. And just in general, what advantages do you think Mongolia has over other main commodity markets? Say, name for example Australia.
Its proximity. Obviously, it's close to the market, and it has a lot of these minerals in abundance. But even though it's very close to the Chinese market, it needs to overcome the transportation issue. You know, it costs around $10 a ton or less to transport iron ore and coal from Australia to a Chinese port, but it can cost $30 or $40 to transport a ton of iron ore or coking coal from Mongolia into the Chinese market. So geographically it's close, but it needs to improve the transportation connections to reduce the transportation costs. At the moment it's being trucked out or trucked to the border. As soon as that can be railed out, you know, you could reach half the cost potentially of shipping those products into the Chinese market. And I think, you know, coking coal and copper, although gold as well is still available, you know, in abundance, enormous deposits, so scale is an advantage in those areas. Iron ore, perhaps not so much, because, you know, the Australian, Brazilian mines are 40, 50, 60 million ton type mines. In Mongolia, you're talking significantly less, you know, 500,000, 1 or 2 million ton per annum mines, and it's a huge scale is a huge factor determining costs of production. So that's something I think to watch out for.
Okay. Just a final question to finish it up. What do you think are the main risks facing commodity producers in Mongolia? Is it just the general price level of the commodities, or is it more the regulatory environment? Or
well, I think the transportation issue certainly is one that needs to be highlighted. You know, that needs to be overcome to access the marketplace. I think the risks are probably better than many people give Mongolia credit for. It seems to be certainly moving in the right direction on that front. Clearly, commodities remain it's a cyclical industry, subject to a lot of volatility. Clearly, the projects that are encouraged need to make sure that they will remain profitable sort of medium long term, and not be profitable at the height of the price boom. So I think a lot of homework and due diligence needs to be done on individual projects to ensure that they're, you know, profitable enterprises.
Is there any commodity you're most bullish on for the coming 5 years?
5 years. Well, copper we're pretty bullish. You know, tin, alumina, as opposed to aluminium, we're pretty bullish on. So going back to the original statement, base metals we are quite bullish generally, although some may do better than others, and often it's related to supply side issues as well as the demand from China and so forth.
Okay, well, thank you very much, and please enjoy the rest of the conference.
Thanks very much.
Thank you.
Thank you.